Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital. We are excited to have everybody back for another live episode. This week has been rather uneventful relative to weeks in the recent past, but that's all right. Plenty of opportunity to make winning trades and plenty to talk about in the markets. The S&P futures currently up about 30 points. We'll see what happens. To talk markets, we've got a loaded panel with us this morning, starting with Money Mander. Money Mander, good morning to you.
Good morning. Happy Wednesday. You hit the nail on the head. I think seeing the Fed's uncertainty and indecision last week at the press conference is really leading into the markets now. We're seeing a lot of uncertainty and a lot of low volume. People don't want to take positions yet.
The range, that's what happens. We saw a ton of volatility. We talked about this personally in our group chats and with our members last week. The volatility that we were seeing, that's abnormal, right? That doesn't happen every day. So you have to be prepared for when things slow down. All right, Diamond Trades, good morning.
What's going on, guys? Excited to be back. We have a good show for you guys today. Let's get after it.
All right, Ramsay Rippers.
Yep, let's do it. Don't really got much to say. Excited to get after it.
I love it. Stock Snipa.
Good morning. God bless America. Let's get some bags today.
GBA. All right, Moe Mamba.
Good morning, brother. Look, man, all I'm asking is for some decent PA. Give us some decent PA. These past 2 weeks have been horrible. Hopefully today. And I heard we got a special guest on board, Mr. Rocker Scooter himself.
Without further ado, Matt from Rocket Scooter,
Hey guys.
Trader's Paradise. Welcome to the show.
What's up? Good morning. Interesting to see everything going on in the futures today. Had a nice little 30-point run up in the S&P, and I'm curious to see if this is some pre-positioning for tomorrow's GDP, which is what I'm hoping we get, some good numbers.
Yeah, I'm surprised to hear Mo say that he just wants a decent move, because from my understanding, he was cracked out last night trading the futures at like midnight. There's your move, brother. You traded or what?
No, I did not. There was no pullback. Yeah. It was straight rippage. I'm not buying. I'm not chasing. Yeah.
All right, let's jump straight into economic calendar and Fed forecast with Diamond and Money Mander.
Yeah, let's do it. As Alejandro talked about, there isn't a ton of news this week, but we do still have some stuff on the slate. So we have pending home sales and the second day of Vice Chair Barr's testimony at 10. We've got some jobless data coming in tomorrow on that GDP number that Matt mentioned, as well as corporate profits. And we have a couple of Fed speakers tomorrow. And then Friday, we've got core PCE and Michigan consumer confidence, which is some high impact news. So hopefully things will pick up here into the end of the week as we get some of this data rolling in. And Alejandro hit the nail on the head, right? The market has really been sluggish as we sort of await this high impact news. We've got this stuff coming at the end of the week. And then we've also got JOLTS and NFP next week. So next week definitely brings a little bit more high impact news. And so that should probably add some volatility to the markets. We're in a situation where we've sort of just been consolidating, awaiting the next economic developments. And I think for people who are bearish on the market, amid these bank collapses, amid a higher than anticipated terminal rate, amid a relentlessly hawkish Fed, the market has really held up for the most part, right? Like we really haven't seen a ridiculous drawdown, particularly year to date, and particularly in tech stocks, which are particularly sensitive to those sort of interest rate fluctuations. And so from that standpoint, I think that you have three things, at least right now, sort of working in the bull's favor. For one, the S&P is entering the start of Q2, which tends to be a positive for stocks. April's average returns only come second to December's from 1950 to 2017. So April tends to be a strong month, that first month of Q2. Secondly, the dollar weakness that we saw in March could potentially provide a positive tailwind for stocks coming into April. And then finally, the markets are actually pricing in a greater likelihood of a pause in the May meeting, up to about 60% now, from about 35% a week ago. So the market is starting to believe more and more that the Fed is going to pull back on some of these interest rate hikes and actually potentially go to pause at the May meeting. So you combine that with well-positioned hedges from big money market participants, right? The market doesn't like to dump when everybody's sort of ready for it. And if you look at the positioning in the market, a lot of people had that downside protection on. And so you can almost start to squeak out a bit of a bull case, at least for the immediate short-term future. Mander, what do you think about it?
I'd have to agree, at least for the short term, right? I think a pause is a pause, and we've said that it's not a pivot. And so I wouldn't get too optimistic on this one, especially after seeing retail sales drop from +3% month over month back negative. We saw unemployment finally uptick. I'm interested for the GDP numbers. We'll see how that comes out. And then ISM manufacturing numbers, off a cliff down really this year. So I think looking over the longer duration, right, things are not looking too great for me. But in the short term, you make a really great case where people are anxious to get involved again. And seeing the Fed pause there, I think might be one of those catalysts to really get a move to the upside. On top of that, the only news we really did have this week that I wanted to talk about is kind of outside of the stock market, but the Case-Shiller Home Index. So it still came in positive in a year-over-year comparison, but actually fell for the 7th straight month for a month-over-month comparison. And looking back historically, as you guys can see here, this was only the 3rd time since the real estate tracking index was created that it was down for 6+ consecutive months. And on top of that, if you look, it's kind of in that 210 inversion recession forecasting over the longer term that I'm talking about here, where every time that this has gone down for 6 straight months or longer, a recession has followed. And so as you can see, we've had recession stem without the home prices tailing down, but every time the home prices have tailed down, a recession has followed. And so I think this one makes a lot of sense fundamentally, right? Just because of purchasing power and housing affordability, this is one of the most interest rate sensitive markets here. And so right now I was doing some math here. A $2,500 mortgage from today versus 2 years ago now gets you 33% less home than it did just 2 years ago. And so I think as we're getting into this position, people are not going to want to start buying new houses, mortgaging new houses. Mortgage rates are down 90%, or not mortgage rates, mortgage activity and applications are down like 90+% at a lot of banks year over year. And so as the buyers are drying up, sellers are going to have to start lowering prices to make them more attractive. And we really haven't even seen unemployment begin to uptick yet. And that is really where it gets into that position where if people are poised to have to sell their home because they're now unemployed and can't afford it, then really, how far do these home prices fall? And I wanted to get your take on that. And if that would have any correlation to the stock market, because obviously, stock market trading show here.
Right. To your point, I saw something yesterday that I think housing affordability is like the lowest that it's been since like right before the great financial crisis, which I thought, just sort of adds right into your point, right? The affordability is definitely down. You get 33% less on a $2,500 mortgage. As far as it relates to equities, I think that it would be interesting to see. I mean, that's what the Fed wants, right? I think that the Fed wants obviously to get inflation down. And so just to curb some of that spending. And I think, limiting new debt creation by having people not buying houses, I think is exactly what they were aiming to do. Right. So I think that they're getting the job done there. And I think that the second part of what they want to do is see some of these asset prices come down, limit that sort of wealth effect, limit some of these people who are sitting on the sidelines, just sort of holding their gains from whether it's, the COVID run or whether it's the real estate boom over the last 10 years. Those people who are kind of on the fence about entering the workforce, maybe give them the little bit of push needed by driving some of these prices down. I mean, that's what the Fed wants. So if it's a 1-2 punch and we're seeing this first, Jerome Powell is praying for something similar in the stock market to follow. So we'll have to pay attention to that as we come into the end of the year. That'll wrap it up for us at Fed Forecast. Pass it back to Alejandro.
Awesome, fellas. Thank you. Now we're going to bring in Matt to talk about some Rocket Scooter, but mainly I just want you guys to get to know the guy. So Matt, we've been working with him for quite some time now. He came to Noah and I when we got the chance to interview him on TCP, our podcast, if anybody's unfamiliar. And from that moment on, we really started looking into Rocket Scooter and what it is that they do. And we've been now using it in our trading day in and day out. Incredible software that you guys have built. Matt, if you want to share a little bit about your story and what you guys are doing at Rocket Scooter.
Yeah, sure. Thanks for having me. So Rocket Scooter, it's kind of a, I guess, when it was created, it was something that we never really started off planning on creating something. A long time ago, I started a trading community with some friends. We were all engineers that got laid off in the last financial crisis, and we kind of just all were into trading, and we banded together and started making tools to share with each other. We originally started off looking at normal things that traders look at when you get started, technical analysis and fundamentals, and it just never seemed to jive well with me, and it didn't have any kind of, I guess, repeatability. And as the years went by, just like any other trader, struggled to kind of get my hands, like onto the subject material. And so as my friends and I, we were just exploring different things, we started looking into positional data and newer data sets that were released by the exchanges. And as the years went by, we started like a little trading club where we get together and make tools and share with each other. And then friends would come by and say, oh, you guys are making something cool. It's not technical. It's not fundamental. Y'all are looking at positional data. Y'all are trying to see where market makers and hedge funds and large institutions are positioned. And we're like, yeah, it's our endless quest. And so like little by little, it just grew into this community that grew bigger and then grew bigger. And as we started making more and more sophisticated tools, we would just pass them along to each other, handing Excel spreadsheets to each other and things like that. And then finally, it came down to the idea that we needed to make something and give it out to everyone. So it turned into an app, and then the app turned into a platform. So now we have a full automated charting platform. It's got a scanner. We're about to be able to trade in it, and just evolved into a trading platform for everybody. So it's the paradigm of all trading platforms are charts with lines drawn on them is kind of like the old school way of trading. And we're kind of the modern approach. If you want to see if the news is bullish or bearish, it's up to you to decide what you think. But if you see where everybody's positioned, you know how they think. And that's kind of the new goal of us at Rocket Scooters.
Right. And for anybody who's looking to try out Rocket Scooter, I know you guys have a Discord community. Is that the best way for people to learn?
Yeah, you guys can you can go to the Discord, and one of the things, our Discord has about 4,500 people in it now. So I mean, we've been growing very rapidly, and the Discord has multiple communities inside of it. Majorly, one of them run by myself, one of them run by Ashton Nolan, who just joined our team. Ashton's a really good options trader. We focus on just about anything there. We teach, we train. We have this really awesome trader boot camp. We'll train you from start to finish, from anything that you want to know about risk management, how to get in, how to get out, how to manage position sizes. We teach the whole thing to traders, people that just want to get started, or advanced traders that want to learn some rule-based risk management trading. So in Rocket Scooter, the whole goal was to create the world's first, like as we started creating it, risk management focused trading platform. As most traders get in and they start trading and they don't have any guidance to how to manage a position. Everything is all geared towards, markets, guess where the market's going and go long or go short. And the idea that you can have risk management as the first thing that you learn, and then we have ways you can program alerts and other things to tell you that, follow the rules that you set. It's a whole new way of traders managing their own positions. And to me, it's so important, especially after COVID and after the recession, where a lot of people are dealing with their first bear market. This is the time you really want to dig in deep and start learning how to control your risk and manage your losses. So I think everyone got a slap in the face after the recession hit, and I think a lot of traders got started during the COVID run. That really massive short squeeze that we had pushed the S&P to all-time highs. Maybe if you started trading there and now you're getting slapped around a bit, it's now it's the reality of what real traders deal with. It's not always this really awesome bull market that you're in. And you have to start thinking about when to trade and when not to trade, which is like the most important part of it. But yeah, the way to get into, to answer your question, to get into our community, we have the software has data feeds and all the features with it, and we have this package that you can do, and it's and it comes with the Discord, the training. You can go through our boot camp. You can get all the access to the tools, all the access to data feeds, the algorithms, everything that comes with it. It's normally $199 a month for the full package, and we're doing this really cool deal for making it $35 a month, which is this introductory thing we did to support the launch, and you can do it for 3 months at $35, which means you get through the whole boot camp, learn everything, see everything we do, and then if you don't like it, you can take it with you and you have risk management to go wherever you go. So we want everybody to try it out and go through the full program. And Discord's a way to get in touch with us, or if you guys have a link or something that you can share with this pod on Twitter, then they can click that as well.
I love it. I love it. And I also want to let people know that you trade live on YouTube pretty much every day, from my understanding. And people can check you out. You're showcasing your skills in real time every day, which is pretty badass. Love to see that type of stuff.
Appreciate that. It's something I've always believed in. Anybody that teaches trading or anybody that showcases trading, or anybody that teaches trading, if you show what you do, it's the easiest way for people to learn. I've always believed that. And it's easier to teach somebody on paper, this is what you should do or what you should have done. But it's another thing for them to sit there and watch little, beads of sweat come down your forehead when you're losing a trade and see how you hold yourself in the composure. That's what I think people really want to see, is how you handle the trade and how you deal with things going against you. And I think that's the most powerful way to learn, to demonstrate. So yeah, I'm live. I put everything on. So you can see everything. Yeah.
Thank you for the introduction. Appreciate you joining us on the show. And we are going to now move forward. We're going to go to Ramsay Rippers for Bet the Bell. For the system, I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. All right, guys, good morning. Let's get right into it. Ryan, pull up the stats for the guys. Let's check the standings. I don't think that anyone really had a win on Monday. I believe the market closed green and everyone took red. Or actually,
it looks like
we all won.
Everyone
won, I believe.
That's what it was. Same thing. The standings remain the same.
Do you have any idea what you're doing? Or you just
look,
this is your one job, and you come in here, you're clueless.
Brother, you why don't we talk about the system today? You're taking off. Let's meet him. Ryan, get him out. Toss him out of my segment. Let's get into it. There he goes. He's gone. So SPY is up about 1% today, up about 3.5 points. What do we got today? Green or red? Matt, what are you thinking? I think you're muted.
Sorry, my mic was muted. Green, 100%. 100%. I'm on the bull side today.
Rocket Scooter is saying green. Diamond, what do you got?
I have green as well. So good to see Rocket Scooter showing some confirmation.
Mander?
Gonna take green as well. It'd be a massive gap to fade.
Mo?
Green.
Snipe?
Bro, I want to make it interesting, but I've got to go with green, man.
You got nothing to lose down there. Take the fade.
The stats are rigged. Everybody knows that.
And Hondo?
Green, pump this shit. I'm still long from 4,000. Absolute ripper overnight. Hopefully we break out of range. 40-40 was the high, I think, of this like post FOMC garbage. Yeah. So hopefully we break out.
How many points are you up on that trade?
36 at the moment.
Nice.
It's a beauty.
Beautiful. All right, let's get into our second question. So Bitcoin is looking pretty strong as of late. The crypto industry's collapse is ongoing and has been playing out for just about a year. It'll be a year in June, I believe. But Bitcoin has shown some ability to shake off the troubles right now. I believe we're trading at 28.5. I think we made a new high yesterday. Or actually, we're coming back up to that 28.9. We are trading right now 28.4. I mean, one trader on Twitter, I saw he is moving $2 million into the USDC for some sort of bet. In terms of the bet, ideally, someone can set up a smart contract where Bitcoin is worth over $1 million in 90 days. Then he wins. Pretty absurd, in my opinion, $1 million in 90 days. That's not the question that we're going to be asking, but traders are bullish on Bitcoin as of right now. We can see the chart is moving pretty nicely to the upside, nearing 30K. We haven't been over 30K since, I believe, May or June. Since June of last year. You guys think we tap this 30K by the end of the week? We got 3 more trading days. Snipe, what do you think?
I'm going to have to say no. I think we reject.
Matt, any thoughts?
I think we reject. I don't think that there's any really good bull thesis for crypto at this point. I think it's just shorts covering, and as people start piling back into equities, they're gonna be not getting in risk on crypto. So we're gonna see the two detach, I believe. So I think it's a rejection as well.
Interesting. Mo?
Yeah, I'm with the boys on this. I think it rejects. Nice little consolidation trap in those bulls. You know, Bitcoin, once it runs, it runs. It's like gold. It's a train, right? Once it gets going, and it does these tricks. It has these tricks where it gets you feeling like, okay, the pump is coming, and then nope, we get a sharp pullback. Yeah, so I'm saying drop from here.
Diamond.
I'll be the contrarian today. I'll go break and hold. But the hold part is tough. Because I could see a break. I mean, really not that far. There is this gap fill, like basically at the high of yesterday, that I think might limit upside. But over that, I can definitely see us getting to 30. Holding 30 is another story. But I'll go yes for now.
And Mander.
All right, if I can digress for 30 seconds, I just have to throw this in there. Bitcoin actually really surprised me when we saw that bank run. People were flowing into Bitcoin when they're taking money out of the banks, which totally surprised me because I always looked at this as a risk on asset, and people were loading this with treasuries, with GLD and gold. Crazy to me that even happened, but I don't think this holds 30K. Maybe breaks doesn't hold.
Yeah, immediately as we had that, Silicon Valley Bank failure on the daily, that's the day that Bitcoin absolutely ripped from 19 to 24 in 3 trading sessions. We're gonna get into our last question here.
I don't get to answer.
Hondo.
All right. I wanted to point out that we asked a similar question when we were trading at like 24K, I believe. And I said that we would so I think the question was 20K or 30K first, something like that. I was the only one on the entire panel that was bullish, saying 30K. Now we're trading at 28.5. I'm sticking with my thesis. I was about to say what Mander said. Eyes peeled on the banking system. It's like there's like a flock to digital currency trade on the horizon here. And this Balaji guy that you had pulled up, who is betting $2 million that Bitcoin is going to trade over $1 million in the next 90 days. Obviously, that's completely ridiculous, but he's basically betting on the U.S. banking system failure. And funny enough, that same guy, so let's not discredit him yet because, let's see what happens in 90 days, although that would, again, be the craziest thing to ever happen. But that same guy called the COVID pandemic. So he does, his track record is pretty solid, making these massive bets up to this point. But yeah, I think that we're going to clear 30K pretty easily. The question was by the end of the week. Yeah, I'll say by the end of the week we do it.
You're muted, bud. You are muted.
Bud.
My bad. No, yeah, it's looking nice on the daily. Nice little bull flag up at this this resistance. It'll be 28.9 is the level to break. That's the line in the sand on the daily chart for Bitcoin. Last question here. I want to know what stock you guys.
Just real quick, for all those Bitcoin haters, this is just a week, by the end of the week question. I do think we will make new highs on Bitcoin. I do think we will hit 100K on Bitcoin. Bitcoin is king. We will see 100K. That $1 million in 90 days, that's ridiculous, but we will make new highs on Bitcoin. This is by the end of week question, break and hold 30, just to clarify.
Could you imagine if Bitcoin went to $1 million in 90 days and you didn't own any? What would you do?
Someone would have to do the calculation on how much inflow that would need to get it to $1 million per Bitcoin. Like I can't even.
Well, the whole thing is this guy's. I mean, I'd imagine he's holding a fuck ton of Bitcoin, so he's just padding his book here. Like, when is he like? The shit can probably go to 32,000, and he's gonna make $2 million. You know what I mean? So, but I guess he's just trying to prove a point.
All right, good Discord, good question, good conversation. Last question. I want to know what stock if you could buy one stock for Q2, what it would be. Which stock are you guys bullish on for Q2 if you had to buy one? Matt, what are you thinking?
I think that in the light of the banking failures, I think that if the market itself is going to turn around, we saw a lot of sector rotating last couple of days out of financials and tech and into energy. So I think that the tech sector was oversold a little bit, but that's warranted because of the layoffs. And I think that they are actually going to be weaker. But financials, I may be going against the herd here, but I think that financials are going to be one of the stronger plays going to earnings. I think that the Fed probably did a good job of what they were trying to do. Inflation's down and all the things. I think that the banks that don't have the risk of collapse are going to probably be good investments. So I kind of like JP Morgan. I think that's one I'm looking for. Now I know that's a risky play, but I do think that we saw some resiliency in the last couple of days in banking as well. So as long as these banks don't, collapse on themselves, I think that that's going to be a stronger play going into this quarter. So that's me.
Mander.
I was going to say the same thing. I love financials moving forward, but I'll tail with the ones I was looking at. If not, I'll take the uncertainty trade here. Let's go metals with GLD, SLV, and TLT. Take one of your three there for the uncertainty trade moving forward.
Nice. And last but not least, let's end this with Snipes. What do you got? What are you thinking?
Very funny you say that. Last Friday, I actually just added a couple hundred shares of Apple at the high 157s, but I'm definitely looking to take that towards that closer to 170.
Nice. I'll love to see you update us with that position. That's going to do us for Bet the Bell. Thank you guys for a good panel this morning. Pass it back to Alejandro.
All right, now over to Moe Mamba for Mamba Market Analysis to wrap up this morning's show.
Go ahead here and share my screen. It's massive. They were just infamous trend line right here. All right, what's up, guys? So S&P daily time frame here. Now, pattern is still intact from the highs. Remember, we've hit on this before. This pattern is still intact. You're looking well for new lows. Now, big thing I'm watching, only thing I'm going to hit on really is this trend line again. We spoke about this last week. We came up, nearly hit it. This is what to watch for. Break through this trend line. You do have a nice daily supply up here. See if we can test it if we do get through it and come through into this gap fill. Now, I'm really targeting if we are able to break and hold this trend line right here on the daily time frame. I will be targeting this gap fill. I will be surprised though if we do come up into the highs here, because this is the pattern that's been playing out since the highs, right? This is the same exact pattern that's been playing out since the highs, and you're looking for new lows at the moment. But I do think we have a short squeeze on hand, and I think everyone's been anticipating it. Market's just been whacked, but let's see if we can get it this week. Let's see if we can short squeeze into this 408.3. Why? That's a gap fill. We still have not filled that gap up here. So if we can short squeeze into here, test this close below, I like swinging shorts here. I'll grab some swing shorts on the S&P here to the downside. But main thing right now is for today, see if we can come up into this trend line. Your big levels will be 399 into 400. Watch that area to clear and then come up and hit this trend line and see if we can get through on the day. If we're able to break and hold, I'm looking for further upside into the rest of the week. Thanks, Hondo.
Awesome. Thank you, Mo. That's going to do it, guys, for this morning's show. Appreciate everybody who joined in and watched. If you're watching on the YouTube, if you could do us a massive favor and hit the like button, that helps a ton. Special thanks to Matt for coming on the show. Matt, it was a pleasure having you.
Thanks for having me, guys. It's always a pleasure.
All right. For those of you that are unaware, we are trading live all day, every day in the Kane Capital Discord. You can go to kane-capital.com. We got the 7-day free trial that is currently live. Would love to have you guys. Other than that, we'll see you guys back here on Friday morning at 8:30 a.m. Eastern time. Trade smart, manage risk, and have a great rest of your day, everybody.